Friends, now I move to the next explanation. Of course, I have got 30 pages to run, but please, I am not going to make you to write 30 pages. Explanation you just look at. See, explanation 5. What is this explanation says? Again, explanations are given for what? As a students, tomorrow if somebody asks you, you should tell. See, there is a section, subsection, clause, proviso and explanation. Explanation is to give the clarity. Proviso is to tell the exception to what is being stated in the section. So, explanation is given for what? For a removal of a doubt. So, if somebody calls for your explanation tomorrow, don't get annoyed or don't get disappointed. You are giving explanation for removing the doubts in the other person's mind. So, for removal of the doubts, it is hereby clarified that royalty includes and has always included consideration in respect of any right or property or information, whether or not the possession or control of such right or property or information is with the payer. That is, even if the payer is not getting complete possession of that particular property or the right, still whatever the payment he is making is a royalty. Such a right or property or information is used directly by the payer or not directly by the payer, because that starting is whether or not the location of such a right or property or information is in India or not. Of course, here the material with me or which is there in my hand is helping us in what way? All these explanations again I am going to explain with examples so that you can give a clap not to me, to the person who wrote this particular material. Explanation 6. For removal of the doubts, it is hereby clarified that the expression process includes shall be deemed to have always been included transmission by any satellite, including uplinking, amplification, conversion for downlinking of any signal, cable, optical fiber or by any other similar technology, whatever may be the name, not such process is a secret. So, how do I remember all this and how the questions are going to come in the exam is the botheration of the student who is preparing for the CA exam, right. First, this is the drama that is there, then you can think about how to remember it. See, analysis, what we are saying is explanation 4 to section 9 is added by the Finance Act of 2012 to clarify that the payments received for transfer of all or any rights to use the computer software, including granting of a license for computer software, is a royalty. Therefore, if a resident imports a software from abroad and gets a license to use the software from abroad, then the payment received by the foreigner shall be treated as a royalty. So, now the intention of the government, are you clear with? The intention of the government is, if Chakravarti is going to have some software from the foreign country and make the payment to that particular foreigner, he has to necessarily deduct the tax at source. For that, the explanation is given. Otherwise, Chakravarti, in the absence of this explanation, can complicate the issue by saying that this is a capital expenditure, not a revenue expenditure and all. So, since the software is to be used in India, the royalty shall be taxable in the hands of the foreigner in India, and the section 9 says what? In respect of the royalty in the hands of the non-resident, when it shall be income deemed to accrue or arise in India, if the payer is going to make use of such a asset for business carried on in India is a point. So, TDS is to be deducted at the rate of 10% as given in section 195 is the point. So, even if software is purchased by an Indian from a resident in India, then also the payment will be subjected to the TDS, but under which section? Section 194J. At final level, this is most important, or as a consultant, this is more important. See, If the payment is made to the non-resident, it is getting covered by section 195. If the payment is made to the resident for royalty, that is getting covered under section 194. J is the point. Then the next issue is, there is a small notification issued by the Central Board of Direct Taxes. What it say? Let us suppose I purchased a particular, I acquired a license to make use, and I am giving that license to somebody else. Already one time we have deducted the tax at source and remitted the same to the government. Subsequently, when I make the sale of my right to use the same to others, that is not going to be subjected to the TDS is a point. That is what this particular CBDT notifications intention. Please look into it. Anyhow, I will make you to write all the important points. In exercise of the powers conferred by section 197A1F of the Income Tax Act 1961, the central government hereby notifies that no deduction of the tax shall be made on the following specified payments under section 194J of the Act, namely payment by a person hereinafter referred as a transferee for acquisition of the software from another person being a resident hereinafter referred to as a transferor, where the software is acquired in a subsequent transfer. This is not the first transfer, this is a subsequent transfer, and transferor has transferred the software without any modification. Nothing is changed. As it is, how it is, I have taken, I am transferring to somebody. Tax has been deducted under section 194J on payment of any previous transfer of such transferor, or under section 195 on payment of any previous transfer of such software from a non-resident. The transferee obtains a declaration from the transferor that the tax has been deducted either under subclause A or B of the clause 2 along with the permanent account number of the transferor. So of course all these things can be well understood with example is the most important. Before you look at the example, what the explanation for and the analysis part of that explanation for, few important things you please make a note. That is, write down, that is explanation 4 to section 9. Payment received by transfer, payment received for transfer of all ALL, all or any right to use a computer software, right to use a computer software including granting of license, for computer software is royalty. Therefore, if a resident imports a software from abroad, and get a license to use the software from abroad, then the payment then the payment received by the foreigner, shall be treated as royalty. Then, since software is to be used in India, comma, the royalty shall be taxable in the hands of foreigner in India, and the Indian making the payment, shall deduct the TDS under section 195 at the rate of 10%. Then, if the software, next point, if the software is purchased by an Indian, from another resident in India, then such payment gets covered by section 194J. Next important is the CBDT notification. What it says? In case if the software is acquired, in a subsequent transfer, and transferor has transferred the software without any modification, and TDS has been deducted in the previous transfer, and the transferee obtains a declaration to that effect, then no deduction of TDS, shall be made on such payment. That is about your explanation 4. Now try to understand the explanation 4 with a relevant example. This is very practical also, because tomorrow as an article student, if you go to a concern, today almost all concerns are completely computerized environments. Some are the other software they are going to purchase. You as a statutory auditor need to check whether such a software payment is being capitalized as an intangible asset and they are claiming the depreciation, or that they are treating it as a revenue expenditure. Now they have to treat it as a revenue expenditure. Earlier they used to treat it as a capital expenditure and used to claim the depreciation at the rate of 60%. Those issues also I am going to take up. Look at Reliance import a software of rupees 10 lakhs from Microsoft USA. Reliance has to deduct the TDS at the rate of 10% under section 195. So it is Reliance in India is purchasing from Microsoft. So definitely it gets covered by section 195. Now in the example 2, Reliance purchases a software for rupees 10 lakhs from Microsoft India. Microsoft India has itself produced the computer software. Then that is, we are only purchasing from a resident in India. Then this payment will be subjected to the TDS, but under which section? Not under section 195, but under section 194J. Example 3. If in the example 2, Microsoft company has imported the software from Microsoft USA and Microsoft India has deducted TDS at the rate of 10% under section 195, and later on the Reliance is purchasing from Microsoft India. If that is the case, this gets covered by the CBDT notification. If it is a subsequent transfer, in the earlier transfer already TDS is deducted and we obtain a declaration to that effect from the transferor, then what is it? You did not deduct the, what is it, the TDS. Then friends, Reliance purchases a software from HP India. HP India has purchased software from Infosys India. Reliance is not required to deduct the TDS on the payments to the HP India if these two conditions are met with. HP India has not made any modification. HP India gives a declaration to the Reliance that it has deducted the TDS on payment made to the Infosys. So from who is purchasing, that is in this particular situation, Reliance purchased the software from HP India. HP India purchased the software from whom? Infosys. So while making the payment to Infosys, HP India already deducted the tax at source. So on subsequent transfer by HP India to the Reliance, Reliance need not deduct the tax at source, but it has to ensure that HP India has paid the tax, deducted the tax at source while making the payment to the Infosys is a point. Then of course an important and very important point, for quite long time we are discussing this point, 40A1. 40A1A provides the deduction for any expenditure by way of a royalty paid by a non-resident and resident respectively shall be allowed only if the TDS is deducted or paid as per the conditions specified therein. So 40A1 and 40A1A provides that royalty shall have the same meaning as given in section 9. Now after the amendment by the Finance Act of 2012, royalty includes what? Payment for computer software. So this is what most important. Royalty now includes payment for computer software. Therefore, amount paid for purchase of computer software is royalty and shall be allowed as deduction under section 37. What is your section 37, friends? 37 is a general deduction for the profits and gains from business and profession. Any expenditure which is not covered by section 30 to 36, and if it is not personal expenditure, if it is not capital expenditure, if it is an expenditure incurred for the purpose of exclusively and wholly for the purpose of the business, then it will be allowed as a deduction. So royalty, now purchasing of the computer software, no longer it is an intangible asset kind of situation. It is well allowed as a revenue expenditure to be allowed as deduction under section 37(1). So income tax rules 1962 provides that computer software will be included in the block of assets, but the rules cannot override the act. Now once act is being amended, your rules cannot have an overriding effect. So income tax rules 1962 provides that computer software will be included in the block of assets of the computer and will be eligible for 60% depreciation. But income tax 1961 provides that payment made for computer software is a royalty. So income tax rules cannot override the Income Tax Act. Therefore, after the amendment through the Finance Act of 2012, amount paid to obtain the computer software. Earlier, prior to the amendment to the through Finance Act 2012, earlier how it used to be Computer software comes into an intangible asset and on which 60% depreciation we used to claim. Now from now onwards, it can be well treated as a revenue expenditure because it is a payment towards the royalty. So accordingly what we are saying, so earlier if it is a capital expenditure, even if you don't deduct the tax at source, okay, no problem. But once it is a revenue expenditure, you are claiming it as a deduction, it gets disallowed in case if the TDS is not paid is a point. So that is the complete explanation for what is it, your royalty, which is very, very important from the examination point of view. Last aspect you please write down. Purchase of computer software and payment for the same is now to be treated as royalty and is allowed as a business expenditure under section 37 and it gets disallowed if TDS is not paid. If TDS is not paid. Now explanation 5. Now I am moving to the explanation 5 to section 9. What it said, Indian banks make use of the servers of the foreigners for credit card transactions. So for any credit card transaction where swipe is made, the swipe transaction is verified by the server of the foreigner which is located outside India. Indian banks make payment to this foreigner for all such swipes. Now the foreigner argues that the income received by him is not taxable in India because possession of the server is not with Indian bank, server is not used directly by the Indian bank and the location of the server is outside India. See what all the things have gone into the mind of the finance ministry and what all the things that they are bringing and taxing, widening the scope of the tax. See, our Indian banks, we have an account, we go to the foreign country and swipe through their, what is it, ATMs. Now for the services that those foreign banks through their server, through their ATMs is doing to us, they will charge from our Indian banks. So Indian bank makes the payment to them. Now even that payment is subjected to the TDS. It also amounts to using of their assets. But for this particular explanation, people used to argue that possession is not with us and it is not located in India. It is not directly being used by us. So where is the question of that income getting taxed in India? So to put an end to that, we have inserted the explanation and said that even such income also will be treated as a royalty and you have to deduct the tax at a source. So Finance Act 2012 clarifies what? The payment made to foreigner shall be treated as a royalty even if possession of the server is not within India, server is not used directly by the Indian bank, the location of the server is outside India. Therefore, such payments of TDS shall be deducted under section 195. So explanation 5, kindly please make note. Explanation 5 to section 9. Explanation 5 to section 9. Payment made to the foreigner, payment made to the foreigner shall be treated as royalty even if number 1, possession of a server, even if possession of the server is not with Indian Bank. Number 2, server is not used directly by the Indian Bank. Number 3, location of the server is outside India. Therefore, TDS is to be deducted under section 195. Look at explanation 6 to section 9. Indian TV channels make use of satellite of the foreigner and transmit their programs. Now the payments made to the foreigners for transmission of the programs by satellite is treated as a royalty and is liable for deduction under section 195. So where any sum referred to in this section is credited to any account called a suspense account or by any other name in the books of the account of the person liable to pay such sum, such crediting shall be deemed to be the credit of such sum to the account of the payee, and the provisions of this section shall apply accordingly. Some people thought that instead of crediting it to a particular account of the particular foreigner, if we credit the same to the suspense account, that is expenditure to actually the payer account is to be, the payee account is to be credited. Instead of that, they are crediting it to suspense account so that temporarily they can avoid the payment of the tax and all. No, whether you credit the same to the payee account or to the suspense account, you are liable for the TDS, liable for it. So explanation 6 also please make note, and I am damn confident that without this one of the 4 explanations, there is no final paper. Explanation 6 to section 9(1), Indian TV channel make use of satellite of the foreigner to transmit their programs. Then even such payment shall also be treated as, towards royalty and shall be liable for TDS. Now friends, another important thing is, law is always kind enough towards chartered accountants, lawyers, advocates and solicitors. As a chartered accountant, that is, there are practical difficulties when firm of chartered accountants and lawyers are receiving the fees from foreign clients outside India. So since it is difficult for these foreign clients to deduct the TDS and pay to the Indian government, it has been therefore provided that in recent circular that if any fees is paid through the regular banking channels to the chartered accountants or lawyers, then the foreigners need not deduct the tax at source. Thereby government is kind enough towards the chartered accountants and lawyers. So more and more foreigners feel like taking the services of the Indian accounting firms and Indian legal firms, because the people who are taking the services are not being bothered with the requirement to deduct the tax at source while making the payment to the lawyers and chartered accountants in India, and remit the same to the Indian government, and then file a TDS return and issue form 16A. This much difficulty we don't want to give to the foreigners. If a foreigners take services of chartered accountants and lawyers and solicitors, then such will not be brought into this net. Then friends, one more thing that we have to go through is like CBDT notifies services rendered by the following persons in relation to the sport activities as professional services. Who are those people? That is sports persons, umpires, referees, coaches, trainees, team physicians, physiotherapists, event managers, commentators, anchors, sports columnists, all these people and their services are brought under the net of section 194. A J only is a point. And another important thing, that is today, as I already told, if you get some problem with your health, the moment you go to the hospital, they will ask whether you have a mediclaim, because there is a third party administrator. So somebody will come on behalf of the insurance company and will act like your brother, right? If I met with an accident, the next moment my brother will be on my side. For what purpose, you please tell me? And quickly admit me into the hospital and make all the payments, so that my dearers and nearers need not worry. Subsequently, he takes from the insurance company, right? So now third party administrator collects from the insurance company and make the payment to the hospital. Even such a payment to the hospital, will it be subjected to the TDS? It is not Chakravarti who is paying to the hospital. Actually, hospital rendered the medical services to whom? Mr. Chakravarti. But Chakravarti has got an insurance policy, third party administrator is collecting that from the insurance company and making the payment to the hospital. Even such payments are subjected to the TDS is a point. So a number of representations have been received from various stakeholders regarding the applicability of the provisions under section 194J of the Income Tax Act on payments made by the third party administrators to hospitals on behalf of the insurance companies for settling the mediclaim insurance claims with the hospitals. The matter was examined by the board. As per the provisions of section 194J, any person not being an individual or a Hindu undivided family who is responsible for paying to a resident a sum for fee for professional services, fees for technical services or royalty or any non-competing fees shall at the time of credit of such sum to the account of the payee shall deduct the tax. So what we are saying, professional services means services rendered by a person in the course of carrying a legal, medical or engineering or architectural profession. So the services rendered by the hospital to the various patients are primarily medical services. So whether the patient makes the payment or third party administrator makes the payment, it is liable for deduction of the tax at source. So I am not making it right because this is not something amendment, but an important point with respect to 194J. So I thought it fit that I will discuss with you. Then friends, I have already explained this particular point, that professional fees paid by a non-resident to the Indian chartered accountants and legal firms is not subjected to the TDS. Now I move to section 194 LA. What is section 194 LA? This is also a new section. Of course, it's an existing section, but the threshold limit got enhanced. What is it? Payment of compensation on acquisition of certain immovable property. So compensation, if anybody is paying to other person for acquiring their immovable property, then such a compensation is also liable for deduction of a TDS. The payer of such compensation also is liable to deduct the TDS and then only make the payment. 10% is a TDS. Now earlier the threshold limit up to which you need not deduct the tax at source is, if the compensation is 1 lakh or below 1 lakh, there is no need for deducting the tax at source. Now the threshold limit got enhanced from 1/7/2012 to what is it? 2 lakhs. Please make note. Payment of compensation on acquisition of certain immovable property TDS is not required to be deducted. TDS is not required to be deducted if the compensation amount does not exceed 2 lakhs. Does not exceed 2 lakhs. So if it exceeds 2 lakhs, क्या करना दोस्तों? Rate of TDS is 10%. In case if compensation exceeds 2 lakhs, rate of TDS is 10% if compensation exceeds 2 lakhs. Right from the rupee one, please remember, not in excess of 2 lakhs you have to deduct. Right from the rupee one you have to deduct the 10%. Now I move to section 194 LC. What is 194 LC? This is inserted by the Finance Act of 2012. What is this section provides? Indian company from payment of interest to a non-resident or a foreign company. So if an Indian company, not other SSEs, if the payer must be an Indian company, it is making a payment to whom? A non-resident or a foreign company. What? Interest. Interest what for you pay? They have, this person has, Indian company has borrowed the money from the non-resident or the foreign company, then it is liable for deduction of the, what is it, a TDS. Then what is the nature of the payment? The payment should be in the nature of the interest for the monies borrowed. Such a borrowing should be approved by the central government, and the payment, is there any basic exemption limit up to which TDS is not required? No such a threshold limit. And then what is it? Tax is required to be deducted at source at what rate? At the rate of 5%. In case the payee company is a foreign company, then surcharge at the rate of 2% and educational cess. Effectively the rate of TDS is working out to be 5.253, and in the absence of the surcharge it is coming to 5.15. Normally TDS is not subjected to the surcharge, but here in respect to the foreign companies and this particular payment, it is also exposed to the surcharge is a point. And then in case the payee is any other person, no surcharge, but educational cess is 3%, thereby effectively it becomes 5.15. If the payee does not furnish the PAN, then you have to deduct the tax at 20%. Not only here, in any situation where TDS requirement is there, if the payee does not give you the PAN, then you have to deduct the tax at source at the rate of 20%. Please take it fast. Section 194 LC. What is it? Interest paid or payable. Interest paid or payable by an Indian company to a non-resident foreign company, to a non-resident oblique foreign company, then the rate of TDS is 5% plus surcharge if applicable plus educational cess, plus educational cess. Then friends, I move to section 195. What is this section 195? That is, as per section 195, any person responsible for paying to a non-resident any sum chargeable to the tax is liable to withhold the tax thereon. Vodafone International case, already I have made a elaborate discussion on Vodafone case. Now I am not going into it, but once the payment is liable for TDS, in case if the payment is to the non-resident, then necessarily you have to deduct the TDS. Failing to do that, you will be liable to be called as a SC deemed to be in default is a point. Now, what are the amendments to the section 195? What we are saying is, amendments to section 195, subsection 1 of section 195 is amended to provide that the provisions of this section shall not apply in respect of the interest referred to in section 194 LB and 194 LC. So, in case if any payment to a non-resident is covered by other sections of the TDS, Income Tax Act, then 195 will not get covered, will not come into play. If a particular payment to a non-resident is not covered by other sections, then the section reference which you have to take is the section 195 is the point. So section 195 applies to whom? Residents and non-residents. New explanation is inserted in subsection 1 of section 195 so as to clarify that the obligations to comply with subsection 1, that is to make the deduction of tax at source, applies to all persons, resident or non-resident. That is why they have kept it as a residents or non-residents. In Vodafone case, what has happened? The transaction happened between two non-residents. The transaction happened between the two non-residents. But ultimately, in the hands of the payee, it became an Indian income. Now, Vodafone says that, Vodafone International says that I am not a resident. Your 195 says about a resident making a payment to a non-resident or a foreign company. So, in order to revert the Supreme Court judgment in Vodafone case, they have amended section 195 to say that 195 is equally applicable irrespective of the fact whether the payer happens to be resident or non-resident. As long as the payee is a non-resident or a foreign company and the income is subjected to the tax in India, then the payer, whether he is a resident or a non-resident, he has to deduct the tax at source. That is the new explanation that says so. And retrospectively, the amendment is made right from 1/4/1962. It is now compulsory to make application to the assessing officer to determine the TDS liability. इसके पहले कुछ डाउट आए तो किसको मिले तो सही है? चार्टर्ड अकाउंटेंट को ओपिनियन ले लिए तो ओके. Let us suppose one person comes to me and say that Chakravarti sir, I am making the payment to the non-resident. Will this payment will be attracted to the TDS provisions and all? Then I can write on my letterhead whether it is going to attract or don't get attracted. If I say it don't get attracted based on chartered accountant's opinion, we have not deducted the tax at source. Kindly treat it as kindly don't treat us as SSC is deemed in default. Now a full stop is put to that particular drama, and they said necessarily application is to be made to the assessing officer is a point. So these two things kindly make note of.